back in the fucking ball game. We're back in the fucking ball game. Okay, let's log this shit in. I'm not a robot, bro. Again, bro. Later, bro. So we're back in the ball game. Right now, I've done one trade, and we're currently in a swing trade right now. But I'm sleepy. It's only 9:50. Bitcoin has been going up, and I like that, bro. Bitcoin has been going up again. That means the other crypto shit that we have is also going up. Um, Hopefully, though, our buy orders get filled. Um, so this is the trade that we took. Not this guy, obviously not. Where was the trade that I took? When did this occur? So earlier today, I just finished my PDC, which is practical driving course. I set up an alarm for this order block right here, but we left and I didn't have data, so I didn't really have an opportunity to take the trade. So this was a 1 hour low. Let's go. Let's start with that first. So this guy was a 1 hour low, right? That guy was a 1 hour low. Um, so I did mark this guy out, and thankfully, or like obviously, there's an order block here. Mark out my our indicator. So what I wanted to do, I wanted to what do you call this? I wanted to have a buy order right here. My buy order would be just 65% of the order block. For example, this is the half the order block, like 15% above the half of the order block. So if we did execute on that trade, we would have profited or gained money. And so this is it also wasn't the trade that I took. I mean, this was the trade that I was planning to take. But to be honest, I didn't get FOMO. What happened to me was I chased the trade. To be honest, I was too excited. Maybe not gonna lie. Maybe I was too excited. But this was the trade that I took. Was that long position? This isn't it. This guy. Um, Behind this guy for now. This was the fucking trade that I took. So just as I fucking entered, where it just fucking went to my stop loss. Fucking nitwit. Fucking dumb fuck. Because I thought, you see this marking? I thought that was a valid IFDG. Because this was a 1 hour low. This was a 1 hour low. I considered that a liquidity sweep. But not gonna lie, that 1 hour low is just too short. And if you were a market buyer, market mover, you wouldn't settle for that low. You'd settle for this low before the rally high. You get my point? So, so that's what happened. We immediately got stopped out. Actually, immediately after the inversion fair value gap right here, I entered long, and it just went downhill from there. So this trade happened this quickly. So that was 2 minutes. That was 2 minutes of trade, and we lost the $50 that we took at the set here. So that's the trade. I mean, my bias was once there was a 5 minute liquidity from a 1 hour low, we're gonna enter long. What happened here was this trade that I was planning to do. This guy, this trade that I was planning to do. I didn't took it, obviously, because there hasn't been a break of structure also in this 1 minute time frame, there hasn't been a break of structure. So Buddy got FOMO'd and instantly got stopped out. So reflection on that, IFVG is reliable. Obviously not in the 1 minute time frame. And you don't need to chase the trade. The plan was correct. You know why I know? Because it's happening right now. The plan was correct. You see? You see? You see? See that rally? I also marked this 1 hour low, this green line. This was another 1 hour low just below that. You see, this is the 1 hour low. Where was that 1 hour low? Here was the 1 hour low, and here was another 1 hour low. So I did mark this guy out, but I was going to the gym, or maybe I did this before the gym. So there's the order block, the downwards movement before the rally hop upwards. So I could have entered here, 65% of the order block, set this order stop loss below, and look for longs. Confirmations on that trade, break of structure. This is the order blocks. This liquidity got swept. Then we touched the order block, rallied higher. Even looking in the 1 minute time frame, there should be a break of structure somewhere here. This is a break of structure, but we might need to back this up more. 1 minute break of structure could be reliable if we just came from a liquidity sweep or an order block of a 1 hour low or a high time frame low. But this was the 5 minute break of structure. If we took long from here, obviously maybe not from the candle close, but for example, since this was the 5 minute high, once this candle closed, we could have looked for long and set the stop loss maybe either below the order block, that would be too low, or either below this consolidation right here, or this mini order block right here. That could have been an option. And because we're talking about gold right now, it's getting back to all-time high slowly. Yeah, so our bias was correct that eventually it's gonna go upwards again after going down from this all-time high. But we FOMO'd and we chased the trade. I was planning on putting a buy order right here, planning a buy order on this, but I got scared considering how low this got. It almost hit the potential stop loss that we could have got made. But we did took the trade. We did chase the trade actually. Where was it again? I can't see it. Where's the trade that I took? Let me remove it. I don't see it. Oh, because it's too short. Here was the trade that we took. It went for 2 minutes. Because we chased the trade, because we thought we were missing out because on this rally movement higher, and no order blocks forming, or like break of structure forming. But we got a lesson. Never chase a trade. That's another type of FOMO. And trust your strategies. Once there's a large movement to the downside, aiming for a 1 hour or high time frame low, be it 1 hour, 4 hour low, session low. Once it hits the order block, either at the tip of the order block, either half of the order block. Once you know there's a liquidity sweep to the downside from initial lows like this guy, as you can see, I marked it out lower, and with this guy, there's already a confirmation of a higher low. This could have been a considerable break of structure, but if you waited for the 5 minute close, your stop loss wouldn't be efficient. Okay, I finally realized this guy is not on. But let's see later. So that was the trade that I took. This 1 minute guy, 2 minute trade. Where's that guy? somewhere here, 2 minute trade. Our bias, our strategies correct after upon touching the 5 minute order block of a 1 hour low or a high time frame low, we tend to go higher. It's just that it didn't happen on the 1 hour low that we aimed for, and the mistake that we did was not wait for confirmations because I was feeling FOMO because of this bullish candle that was happening, and we chased the trade. I mean, I've heard it from everywhere. Never chase a trade, but I just did it, and that's a lesson. Right now, we just hit this FVG, and we are forming ionic. We might form an IFVG once this candle closes below this guy. To be honest, my previous biases on order blocks and stuff like those fair value gaps were one-sided to the bullish to the upside. But considering this, for example, somewhere here there's an order block. You see, this is an order block somewhere here, and since it touches this order block, right now it's respecting the order block, the bearish order block. Before or when this was happening, the large rally of the gold, that wasn't happening. We didn't respect bearish order blocks, bearish fair value gaps. Yeah. So we need to look into our strategies, our confirmations, continuations back again. To be honest, I didn't really do my homework for weekend because I was busy. This might be an IFVG, and this might aim for maybe a 1 hour low or 30-minute low, considering how much of a movement it needs to do. If it needs to aim for a 1 hour low, it might aim for this guy. It might aim for this low, whatever that low is. Or it might just be testing this fair value gap. Or since this is a 1 hour fair value gap, it might even test here on this guy. You see, it might test there. We could go tighter, maybe look. We could test here. Maybe once it tests there, we rally to the upside. Aim for this initial high. That's considerably 1 hour high. After that high, we could aim for all-time high. If price breaks out on this price range, I mean, we could look into it. We don't need to take the trade. But this is bad news for a swing trade. Because to be honest, I don't know where I entered on that swing trade. I just entered. I just said fuck it. That's fine wrong. Actually, I bet you it's down 30. It's only 30 right now. It's 38, 39. I could mark out where I entered. 4255.63. 4255.63. So I entered this guy. 4255.63. Yeah, there we go. And our stop loss is on 4205.96. 4205.96. 4205.96. 4205.96. There we go. So our stop loss is here. We can mark this out to the 4 pixel. And maybe for this guy, we mark this out blue. Another 4 pixel. Just to mark out our entry. Remove this guy. 4205.96. 4205.96. There, somewhat above, almost above here. A bit. Yeah. So this was the entry, this was the short. Right now we're in the long. I might this is London session low, Asian session low. So if we do trust the TJR strategy, we could look for this low or lows. I mean, this low already got cleared. This low hasn't been, and this is a session low. So price might go here once it breaks out of these fair value gaps that occurred here and this consolidations. Okay, let's put a magnet here. Let's see if the magnet has some attraction. Actually, there's a magnet already. Okay, that's not what we expected. Okay, so this might attract the price considering it's a session low and a 1 hour low. And right now, the price of gold doesn't really respect. How can I find rotate this guy? I don't know how to rotate this guy, but maybe it goes low to this low. Okay, it's respecting somewhat this order block. But right now, we have this for support, so might go lower. And might have some reaction from this fair value gap. And another reaction from this. But this is the, what did I even mark out here? 30-minute? Yeah, I think a 30-minute. Or a 15-minute. Or a 1 hour. A 1 hour. I did mark a 1 hour. So somewhere around the middle of that 1 hour, we might have bullish movement. So that's it for this journal entry. So we lost. The lesson that we had was to not chase our trade, and if we haven't found confirmations like a red structure or like this clear the liquidity sweep from an order block of a 1 hour low, even though we're already in a 1 hour low, we need to look for confirmations like a higher low, liquidity sweeps, clean order block, something like that. We can't just trust an order block touch. So that means that a buy order might fail us, and it might just what happened to my trade. It might just immediately hit. It might just immediately hit our stop loss. So I guess that's it. I'm tired. I'm gonna turn the down and try and sleep.